why that those two funds are reflecting a deficit.
Okay. By state statute, you gotta remember, a lot of our statutes were created before a lot of this accounting had evolved, to this level. And prior to GASB 34, we basically had one presentation method, and it was basically a cash method. It basically essentially mirrored your budget. If it was a cash flow spent or encumbered during the current year, it was charged that year. Otherwise, it wasn't. With GASB 34, there was a thought that, at least on a government-wide basis, that we needed to have our financial statements tied more closely to what people were used to looking at, but on a full accrual type of basis. And so the prohibition against deficit fund balances, the reason why that's there is basically that we are prohibited by statute from spending money that's not appropriated. And so that's why we go through the budgetary process. We basically have limits on, we can't just pull the budget numbers out of the air. There's limits on what we can budget, and that is designed to basically create financial solvency in cities and make sure that Oklahoma doesn't have much cities like California that are broke. So that statute's going way back. And the problem that we're running into, and on these two funds, we didn't see, if you notice, it's a kind of a little bit of conflict. Over on our compliance report, we said we don't have any compliance issues, but here in the notes we're saying we've got a statute that we didn't comply. And the problem there is we're going to take kind of two instances. The airport fund is really a relatively simple one. It's a small fund. It's a straightforward fund, and if we are close, which we can be a lot of times, at the end of the year, then Doug says, hey, we need to do an inter-fund transfer to basically make sure we don't have a deficit balance. The problem is that basically, and this is exactly what happened this year, is that how that he encumbers that money is different than how it's accrued on the government, on the GASB 34 side. And so what happened is that on his books, he's looking at that, and he doesn't have a deficit balance. But when all the adjustments are made to a full accrual basis, because of some of the things that are basically charged to this year, and it gets a little bit even more complicated because with governmental, we have a relatively rigid standard of when we can recognize income and a relatively lax standard of when we have to recognize expenses. And so a lot of times we've got an expense that really is not necessarily spent this year, but has to be charged to this year. And we've got a corresponding revenue, and it really should be accrued. If we were a business, we'd accrue it, but under the governmental standards, we can't. And so that creates a little bit of a problem. So the airport fund, we didn't feel like was a compliance issue that we had to report because it wasn't material. And because it wasn't systemic. It wasn't as a result of a breakdown of a procedure or anything. Doug did everything he was supposed to do, but he doesn't have a crystal ball. And a lot of these adjustments don't happen until really, in some cases a week before this audit report, depending upon if we find them or the accounting consultant. The grant fund is a unique situation because basically very few cities even have a grant fund. And I would argue that basically having a grant fund is actually going above and beyond what we really should have to do on in terms of good accounting. The whole purpose to have the grant fund as a separate fund is to be able to basically segregate all of our expenditures, matches, everything on grants, so there's no question that the grant funds are spent only for the right things. The problem is with that grant fund is that we don't really have grants to speak of anymore that are basically drawdown grants where we basically say, okay, we're going to spend $100,000 in the next 30 days, so we get $100,000 and then we spend it and then we go request another. All of our grants today, for the most part, are reimbursements. And so what happens here is we get into a timing difference. We've spent money. We're going to collect that money. If all of the grants were closed out, our grant fund would have a zero fund balance. There's really no way for us to basically get a positive fund balance in grant fund, but we can get to a zero. But the only problem of it is we don't get to get reimbursed as fast as what we spent the money. And so we had some discussions about that this week as to whether or not, basically how it had to be reported, what the issues were. And in my mind, the way that I kind of rationalized that was really, even though the grant fund from your guys' accounting system is a separate entity, it's not really a separate legal fund. It's really part of the general fund. And so as long as the general fund's got more than a $71,000 surplus, I don't see that as a compliance finding. But if that was to be brought up, basically, my argument would be that you really shouldn't be penalized with a compliance finding if you're doing a better job of accounting than really what you have to. And like I said, that's a little unusual. I mean, I concur. I tell you, the grant fund, the way that's set up for us, probably saves 6 or 7 hours in a lot of years, because we basically got every grant fund segregated, or every grant expenditure segregated into one area. If we had to pull all that out of general fund like is in the norm, it would be a considerably more difficult task for us to audit those funds. But that's and so we technically do have a violation of that statute. I don't see that we had a reportable violation, because I think the general fund really is a legal part of the general fund, and the airport was just a timing difference, and it's clearly immaterial.